Hello YouTube, my name is Tony. Today we're going to do break-even analysis. I like this topic because it's one of the most common in exam papers, and it's also one of the easiest. So this is break-even analysis. Break-even analysis. Some of you might know it as CVP, which just means contribution volume profit analysis. Okay, before I start this question, if you go down in the comments or in the description of the video, you'll be able to download this exact question with my solution as well that I've worked out. All right, so this question here is question 5. It's one of the past papers of the students that I teach. We've got a company here called Basket Limited, which is a small home-based business which makes baskets. The costs associated with making one basket are as follows here. We're given, for example, wood per basket is £1.50, cloth per basket is 50 pence, wages per hour. Now this is now something different. It's not per basket, it's wages per hour. So I need to know how much is it per basket. All right, we'll get back to that later on. Then I've got my rent here, which is per month £300, and my general offer is per month again £300. I'm given my selling price, which is £16, which is okay. I'm given my expected number of units to be sold here, which are 500. Then it currently takes 2 hours to produce one basket. Okay, so if it takes 2 hours here, it takes 2 hours to produce one basket. How many pounds do I need to produce one basket? If I know that per hour I'll be paying my laborers or my workers £6, so it's as simple as coming here and say 6 times 2, which gives me £12 per basket. All right, so that's my wages per basket. All right, then I'm going to come down to the question here. The question is pretty long, but for this 10-minute video I'm only going to do part A. For the next video, which is again 10 minutes, I'm going to do part B, which is a bit more complicated than this one. But for this question, we're required to calculate the following things that I'm going to highlight in pink: contribution per unit, the break-even point, and the profit if Basket Limited sells expected number of units. So that's what I'm going to do on the next page. So the first thing that I'm going to calculate is contribution per unit. I'm just going to go to my next page where I'm going to do my workings. So here I'm going to write the formula first. So contribution per unit is equals to your selling price minus your variable costs. So if I do this, I should be able to get my contribution per unit. So mind you, these are variable costs per unit as well. So per unit of variable cost as well. So if I go back to my question, my selling price is given. It's as easy as taking the 16. So I'll come back here, put my 16 minus what are my variable costs. So my variable costs, these are costs that vary with production. So the first one that I have here is wood per basket. So these are my materials. So this is a variable cost. I'm going to take them in red. So variable cost. Cloth per basket, it's a variable cost as well. My wages, these are variable costs. Then my rent, this is a fixed cost. So this is my fixed cost. I'm not going to include it. My general overheads, again, this is a fixed cost because it's per month. It's not affected by the number of units that I produce or the number of baskets that this company produces. So fixed cost. All right, so my variable costs here are going to be £1.50, £0.5, and £12. So that's what I'm going to put here. It's going to be £1.50 for materials plus 5 plus 12. So let me just make sure that I've put everything up here. Yes, so wood, cloth, and labor. That's fine. So if I do this, I should be able to get my contribution per unit. So it's 16 minus, that's 14. All right. So that means my contribution per unit is £2 per basket, if you want, or per unit in this case. So let me just write per unit, so that should be applicable in every case, per unit. So for each basket that I'm going to make, or that this company is going to make, they are going to get £2 per unit in contribution. Then the next question, so I've managed to answer this question here, contribution. Right. The next one is break-even point. What is my break-even point? The formula is for break-even. Write it down. So break-even point in units is equals to my total fixed costs. So total fixed costs or overheads, fixed costs, divide all this by my contribution per unit. So my total fixed costs, these are the other two costs that I didn't use. So it's my rent per month of 300, my fixed cost per month again of 200. So it's going to be 300 for rent plus my overheads of 200 divided by my contribution per unit, which is what I just calculated on top. I'm going to show you now this one here. So it's going to be 2. What do I get? I end up with 500 divided by 2, which is 250 units. So if they sell 250 units, this company is not going to make a profit or a loss. It's going to break even. Its revenues will be equal to its costs. So if you want, profit is equals to 0, or if you're pessimistic, loss is equals to 0. Right, so the next thing that I'm going to do here is now calculate the profit. If Basket Limited sells the expected number of units. Alright, so how do I get my profit? So expected profit, right? So expected profit is equals to, I could use many formulas here, but I prefer using this one. Total contribution minus my fixed cost. So what is my total contribution? I know that contribution is £2 per unit, and how many units am I going to are budgeted or are being expected to be produced? If I go back to the question here, the units to be produced are these ones here, 500. So times 500 minus my fixed overheads, my fixed cost, which are on top, the 300 plus the 200. So I could put them like that, or I could just write 500. This is going to give me my profit of £500. This is the expected profit. Right. So another way of doing this, if this is different from what you know, you could use this formula. Expected profit is still the same thing. Is equals to total sales revenue minus total cost. So my total sales revenue is going to be 500 units times my selling price of 26, my selling price of 16, so times 16, minus my total cost, which is made up of fixed cost of 300 plus 200 plus my variable costs. My variable costs, they're 14, if you still remember on top there. If I add them, here are my variable costs, they're 14. Alright, so 14 times 500 units. So that will give you again £500 as expected profit. Alright, so thank you, Hicham. Please leave your comments. I'll try to respond to most of them. And for this file, please go to the description. I've posted a link there where you could download the answer and the original question as well. Thank you very much. See you in part B of this question, where things get a little bit harder. All right.